heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde of Bloomberg's World Headquarters in New York. Ed Ludlow, he's on assignment in Sun Valley. This is Bloomberg Technology. Coming up, we'll bring you the latest on Microsoft's $69 billion deal for Activision. That's as companies, they get a new shot at winning over the UK on the acquisition. Plus, we'll speak to one analyst who says Meta's Threads, well, it could add, $8 billion in revenue per year in the next couple of years? We'll discuss. And the Big Four accounting firm KPMG, it partners with Microsoft for a multi-billion-dollar partnership to incorporate, you guessed it, generative AI into its business. We sit down with the KPMG CEO, Paul Knapp. But first, let's check in on those markets, and I'm very pleased to welcome Bloomberg's Abigail Doolittle on that.
Wonderful to be here with you, Caroline. And we've got a bit of a risk-on tone for stocks. We do have the S&P 500, the NASDAQ, and the other major indexes higher. But I will note that we're off the highs. Now, at the highs, these indexes up more than 1% on the cooler-than-expected inflation report. That sent yields lower, which really is helping stocks in terms of a valuation perspective. They look a little bit less expensive. That's especially true for big tech, such as NVIDIA and Microsoft. So those stocks, the big tech names that had been under some pressure earlier this week on the upcoming special NASDAQ 100 rebalancing, well, today they're getting a bit of a bid. Now, this is showing on the communication services sector on the year, the second best sector on the year, right now up about 37%. And you guessed it, a couple of the names helping out today. Meta, of course, Threads, their Twitter competition, or the competition to Twitter, it is really getting a bit of a boost. I know that there are some analysts out there that think it could be a significant revenue boost for Meta. We also have Alphabet trading higher on the day. If we flip up the boards, we will see some of these big tech names really flying. Microsoft, Alphabet getting a bid off of the lower yields as well. A bit of a reprieve for big tech overall, Caroline. So while the S&P 500 and the NASDAQ 100 even may be off their highs, these big tech names really hanging on to some of the gains.
Certainly are. And let's talk about a couple of those key names at the moment, because over in the UK, the antitrust watchdog has said that a new merger investigation into Microsoft's $69 billion Activision deal, well, it may be needed if the duo restructure their deal to try and reverse that previous UK veto. For more, let's bring in Bloomberg's Leah Nyland, who's just been all across the competition analysis of this deal. And I mean, is this a good thing to go back to square one?
In this case, it actually is. So the UK had vetoed Microsoft and Activision before, effectively blocking the deal. But after yesterday, when a US court said the deal can move forward, the UK sort of agreed to give it a second look, which is pretty unheard of. But in order to do that, they said Microsoft and Activision need to restructure it a little. So they're not looking at exactly the same thing. So Microsoft and Activision are going to make an offer to the UK and sort of restart negotiations over whether they might approve their deal.
But in many ways, people have sort of said that the FTC and other regulators have got a bit of a win on their hands already, because they have forced changes to the way in which, well, competitors might be able to access the games eventually owned by Microsoft, Call of Duty being the key one. What other ways could they alleviate any anxiety around a lack of competition?
Yeah, so this was one of the things that the judge here in the U.S. made a big point of, is that the regulators had already won a little bit by getting Microsoft to offer these 10-year deals to a lot of its rivals. So those deals they have with like Nintendo and Valve, the PC gaming company, and they've also offered them to some of the people who do streaming games as well. But the thing about the UK CMA is they really hate what they call behavioral remedies. So like when a company is just offering to do something like a 10-year contract, they want something, what they call structural. So they want Microsoft or Activision to actually offer to sell something off. So Microsoft and Activision are now sort of in the position of trying to decide what it is that they might be willing to sort of, cleave off from their main deal in order to sort of placate UK regulators.
Overall, Blair, does this feel once again that kind of big tech's almost winning here in terms of getting these deals through?
That's a good question. I mean, the FTC is expected to appeal as soon as this afternoon, so it's not technically over here in the U.S. But yeah, the antitrust laws are definitely not really able to take on the tech stuff. You know, we already had the FTC losing earlier this year in the Meta Within case. Although the difference with the UK is, you know, they have a little bit of a better law. It's a little bit harder to appeal. So you had them blocking Meta Giphy. So Meta is now actually going to have to spin off Giphy, even though the CMA was the only place in the world that had opposed that deal.
Interesting, this backward look at some of these big deals. Leah Nyland, thank you so much for bringing it to us. And interestingly, we're going to dig into Meta in particular. We just finished that conversation with Leah on Meta. Let's dig into that company in particular, because we have been all over Threads, of course. More than 100 million people signing up. I'm sure plenty more than that now. And it is sort of, for many, becoming a Twitter alternative, an add-on. And over the next couple of years, one analyst sees that Threads could reach close to 200 million daily active users and generate, well, about $8 billion in annual revenue. Joining us now is that analyst, Mark Mahaney, Evercore ISI Senior Managing Director. You've got an outperform rating on Meta, $350 price target. Interestingly, it's no longer your number one top pick because of the rampant, rapid rise in the share price that we have seen on the back of this year, really. But Mark, the Threads, 8 billion sounds like a lot, but it's not compared to the annual revenue in total.
Yes, but all of that I agree with, Caroline. I like the way you set it up. Could they get to 8 billion in revenue? One of the biggest, the easiest part of that math, if you will, is the revenue that they could get per user. Twitter has a documented history. They were generating about $20 in ad revenue per user. Meta, Facebook also has a documented history here. They've been able to generate monetization levels 2 to 3x that of Twitter. And I don't think it's because they spam ads all over their user interface, although maybe they do a little of that. It's because they are much better at targeting and matching advertisers with users. They are able to find relevant audiences for advertisers and marketers to put relevant ads against, and they're able to track the performance of those. That's why you've got almost 10 million advertisers that are on. There's a lot of these are small businesses, obviously, that are on Meta. So yeah, they'll be able to better monetize if they get the users. The question is whether they will or not, but that 100 million ramp is outstanding.
When do you think we might see that switched on? We know Mark Zuckerberg himself, and we've heard from Anna Mosseri as well, saying, look, we're not going to think about putting the advertising out there until we have a line of sight on 1 billion users. Do you think that's really what they're going to be waiting for?
I take them at their word on that. Since these numbers that we're talking about, even at 8 billion, I know that sounds like a big number. That's only kind of a mid-single-digit % impact for Meta. So it's not like they need the ad revenue near term. In fact, I think the absolute genius strategy here would be show no ads. You know, like bring more and more users onto Threads. And what the Threads experience has got to improve dramatically. I assume it will. I assume it'll be easier for us to use it for the great things that we've used Twitter for in the past. When Uber CFO, the news came out that he may be resigning. If you go to Twitter, if you'd gone to Twitter, you would have found plenty of relevant news articles about it. If you'd gone to Threads, you wouldn't have seen anything. Like, there's that real-time news element that's really great, magical about Twitter. So there's some of that needs to be built at Threads. What I just find interesting, the setup here for Meta is, I think Twitter as an asset has been fundamentally underinvested in for a couple of years, not just since Musk took over the company, but for a couple of years, both on the advertiser side and on the user side. That created the opportunity for Threads that can just bring in so many new users from its existing database, its existing user base of 1.5 billion users.
Well, the race is now on, therefore, and it feels as though Twitter has been making changes in terms of brand safety to a large extent. And at the same time, they've got this sort of window before Meta does turn on the advertising switch to an extent. How much do you think, you know, Twitter is so embedded as our lifestyle and our use case? Can Threads really keep the zeitgeist going?
Well, I guess we should, if we, I think the sober assessment is we should assume that Twitter will be the leading real-time news, public town square, communications platform, you know, for the next 5 to 10 years. They probably will maintain that leading position, but it's so interesting that there's this opening created. So it is possible that Threads, if they can come up with a better product, their product's not better than Twitter now, but could they make one that's better? They certainly have the potential to do that. They've got the engineering talent to do that, and they can certainly bring in a lot more users. And there's a couple of really simple things that they've done. I mean, when you think about the challenges that Twitter has had, its onboarding challenge for a lot of people is real. Like, what do I get out of Twitter? It just seems like a deluge of information. How do I find something useful? I think Threads has made it easy for people to come in, to find followers and to find people to follow, i.e. their friends, people that they know. And then, and they've done it in a way that maybe seems more, I don't know, user-friendly, that's less caustic as an environment. That's something that still needs to be addressed on Twitter. It's been a long-standing battle on Twitter, how to get some of that uncivil commentary off the site. So there's a real opportunity here for Threads. That's what I'm more intrigued by. It's all potential, but these 100 million users in less than a week, we've never seen that before.
Mark, here we have a conversation about competition being added. For many, it's a worry about competition being taken away. I'm thinking of Meta as, I think, in a closed room tomorrow in the EU, having to try and vindicate Marketplace in particular and how they haven't reduced unfairly competition there. How much is regulation a headwind to all of the big tech names right now?
It's going to be a constant presence, constant headwind going forwards. If I simplify all this, Caroline, I think about three types of regulation. There's kind of monopoly power regulation, privacy, and then third is kind of social health kind of sort of regulation. When it comes to Meta, there's no monopoly regulatory risk. I mean, if there really was a monopolistic power at Facebook, you never would have had TikTok. We obviously have TikTok. So if there's a new social media, there's nothing to stop people from creating a new social media outlet and for driving traffic there if they have a really good service. TikTok proved that. The other issues are more serious, the privacy issues, but I think Facebook has kind of come around and relatively reasonably addressed that. And the social health impact of Facebook, that's waxed and waned. I think we had a point where we dramatize the impact of social media on social health. There are plenty of other parts of media that have positive and negative impacts on social health. So I just sort of think we've moved away from that. Maybe we've also matured a little bit in how we think about those risks. So, but they're going to be longstanding. It comes with the territory because you've just invited everybody to make a comment, and not all those comments are going to be good.
Mark Mahaney, Evercore ISI analyst. We didn't even get on to your Uber perspective, your top pick. Interesting on the Domino's news today. We thank you so much, of course, Mark Mahaney from Evercore ISI. Meanwhile, coming up, we've got to discuss that big deal, KPMG and Microsoft entering a multi-year, multi-billion-dollar AI and cloud services agreement. We discuss the announcement next. KPMG CEO, Paul Knopp. And meanwhile, let's just look at what's happening with Shopify, up more than 1%. But let's go to the nitty-gritty, the fascinating story that this company is basically putting a price tag on time, rolling out a calculator embedded in your calendar if you're an employee there, that estimates the cost of any meeting of 3 or more people. Basically, the company's new internal tool is trying to push you to be more productive, take away what they project to be 322,000 hours of meetings this year by basically putting a price tag on it. It's expensive, folks. This is Bloomberg. Big Four accounting firm KPMG has just announced a multi-billion-dollar commitment in Microsoft Cloud and AI services over the next 5 years. It is expected, though, to bring in more than $12 billion in added revenue. Joining us now to discuss the partnership is Paul Knopp, KPMG CEO. And so talk to us this commitment, but to bring more in. I'm assuming this is all a productivity boost?
Well, you know, you think about the velocity of change right now, Caroline, and the speed of innovation. And generative AI, many of us weren't even talking about it 9 months ago, and now it's all anybody wants to talk about. It's amazing, that velocity of change and speed of innovation. So to co-develop solutions with Microsoft for all of our businesses, audit, tax, and advisory, that we can bring to market. Some of those solutions are already under development and some are in nascent stages, but we're really excited about the power of that partnership and what we can bring to market in the future, working together with Microsoft. So we'll spend $2 billion or invest $2 billion over the next 5 years on AI and cloud, and we expect to generate about $12 billion of additional revenue over the next several years through cybersecurity solutions, through cloud migration, and also through new innovative applications that use generative AI.
So with your own workforce having the early access to Microsoft 365 Copilot, the Azure OpenAI service, ultimately, will you have a competitive edge? Will others follow your lead? Will they also do deals with Microsoft?
So there's no doubt they will. This is not an exclusive arrangement, and we are going to be investing in generative AI across the board, so we're looking for additional opportunities. But we think our long-standing relationship with Microsoft, which dates back to 2000, and our history of working with them as a partner, even going to market with them with 2,500 clients as joint clients, that we have an edge in the sense that we have that long, strong history of development. And we're going to ideate with them the power of their technology with the power of our knowledge, experience in advisory, tax, auditing is a really great combination for ensuring that we can solve our clients' most complex problems and actually also help our communities and society be better.
How are you selling this to your workforce? Because a lot of anxiety is out there that, look, AI is going to take our jobs.
Right. Well, if I look at the 40 years I've been at KPMG and I think about the history of technology, I haven't seen a technology disruption. I think this is the greatest technology disruption in many decades. I haven't seen one yet that's caused a loss of workforce on a gross basis and a net basis. So I actually believe that workforces over time will grow with generative AI. We're going to need more people to interpret results, to co-develop solutions, to develop solutions. We're going to need more data scientists. We're going to need a lot of quality and cyber assessments of the information that the generative AI applications produce. So as I think about that history of technology disruption and what it's done to workforce, it's actually generated economic activity that should allow for us to grow our workforces in the future. And actually also, put some of those mundane routine tasks that people don't enjoy doing and upskill people to do more interesting, creative things.
And you've been out to the executives that you work for, the clients,
Yes.
and they seem to agree. They're also saying, look, this is actually going to add to employees. This is going to add to our productivity.
That's right. So, we just completed a survey recently where 80% of executives said that this would be a major disruption. 75% said to be their top emerging technology for the next 18 months. And there's general agreement, too, that it was going to add headcount over time. So we feel pretty confident that it'll also reduce stress because some of these mundane tasks, again, will no longer have to be done by people, and they can then provide more value-added advice, do more creative things in the work environment.
Here's to having more exciting work. I'm interested, though, you've referenced cyber and the way in which you're going to be using generative AI there. A lot of the worries, and there's been this quick adoption by companies to use OpenAI, team with Microsoft, but they don't want their own workforce using it because they're worried about their own data and it somehow, ending up in the data troves that are going to be in my own ChatGPT. How have you dealt with that, the privacy angle?
So when we use a ChatGPT version, we use it in our own secure environment, not the open source application that's out there, which provides a lot of protection. And we also really value the enterprise protection and security that Microsoft brings to us. So we want to use AI responsibly, ethically, and in a very secure environment. As we develop these solutions, we're going to ensure that companies have that same kind of security, governance, and architecture built around their solutions. That's going to be very important for the future because there are those concerns, along with concerns around data accuracy, too.
Well, we continue to see how that is monitored and improved on and iterated. And as you say, a big disruption that we're in. Thank you so much for coming on and talking about the deal.
Pleasure being here.
He's the KPMG CEO. We thank him. Meanwhile, speaking of taxes, I don't know if you saw that Democratic lawmakers, led by Senator Elizabeth Warren, have actually called on federal officials to investigate whether the tax prep companies focused on the consumer, like H&R Block, and some tech giants, have actually broken the law when they shared sensitive information that millions of taxpayers entered into their websites. Now, the practices might have violated taxpayer rights as well as privacy laws, opening them to billions of dollars of liability, according to the senators. Tune in tonight, live 5:30 p.m., because we've got an interview with Senator Warren. This is Bloomberg. Time now for Talking Tech. First up, China-based hackers, they breached a series of email accounts linked to government agencies in the US and Europe. Now, the hackers accessed and exported unclassified Microsoft data from a small number of accounts. Plus, chip designer ARM is in talks with NVIDIA to join a group of potential investors to anchor its initial public offering, according to the Financial Times. Now, NVIDIA, which is a long-time partner of ARM, is seeking to invest at a valuation of $35 to $40 billion, is being reported. Meanwhile, Elon Musk will hold an event broadcast on Twitter Spaces focused on artificial intelligence. And he's invited two prominent US House lawmakers, Democrat and Republican state leaders, will speak with Musk for about 45 minutes tonight, 7 p.m. Eastern Time. Meanwhile, let's talk about AI a little bit more, because today's big take, how AI can make politics more dangerous, with AI holding the potential to supercharge dissemination of misinformation in political campaigns, among other things. We really want to dig into that, the highs, the lows of AI. Bloomberg's Emily Birnbaum for more. Great piece. And at this moment, how are we already seeing AI sort of becoming involved in campaigns already?
We absolutely are. We're seeing it from the local level, the state level, and we're definitely seeing it at the federal and international level. So there have been instances of pretty convincing deep fakes. So that is pictures and videos that aren't real but look very real, circulating in campaigns, up and down the board.
We're also, though, of course, going to sort of supercharge not only potential disinformation, but go supercharge the workers who are trying to activate campaigns as well. How are we already seeing sort of productivity being amped up at the moment?
Yeah, so for the big take piece that published today, Laura Davison and I talked with congressional staffers, campaign staffers, lobbyists, and politicians. So the people who make up Washington, and asked them, how are you using AI? And we found it's already being used in a really widespread way. So lobbyists are using it to create the first drafts of campaigns. Congressional staffers are using it just to get the first draft on a page of speeches. The generative AI still isn't sophisticated enough to write bills, but we're not that far off.
Okay, so look, there are some positives to all of this, but Washington in and of itself is also eyeing AI and the regulation of AI pretty seriously. Can they tackle its own influence within their own sphere of political campaigns?
Yeah, Senate Majority Leader Chuck Schumer just today said that this is going to be one of the most difficult challenges that Congress has ever faced, is trying to regulate this very complicated and nascent technology. They're right now just sort of in the talking phase. They're having briefings to get lawmakers up to speed with what AI is, how it's being used by our federal agencies, and how it's being deployed by the tech sector. So we're still very early on, but they really don't want to repeat the mistakes that they made with social media, where they were kind of asleep at the wheel. Social media grew and grew, and now it's pretty much an unregulated space.
Emily Birnbaum, great big take. Go read it online, or if you're lucky enough to have a terminal. Thank you very much indeed. Meanwhile, look, coming up, we're talking gaming. More on that Microsoft Activision deal and what it means for Sony, competitor next. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Let's get a check on these markets halfway through this trading day. And look, we're feeling buoyant, mainly because of the macro picture. The inflation coming in at a slower pace than had been anticipated. Clearly now back to that 3% level. It's still not at the Fed target, but it has come down significantly, lowest in a couple of years. The NASDAQ gets higher, up some 0.8%, big tech on top. We see the two-year yield screeching down some 14 basis points as perhaps we start to factor out any further rate hikes past that July date that we're anticipating one. Bitcoin actually lower versus the dollar, even though we did see some dollar weakness on the news of the inflation report. So we're off by about a third, but still above that $30,000 level. Let's move it on, have a look at some of the individual names, because, well, as we've been seeing, actually a little bit of a change of tune of Activision Blizzard. Yesterday, we ramped higher as we got the news that the US court had, for now, not stalled on the deal to be purchased by Microsoft. So perhaps just giving away a little bit of that profit that was taken yesterday. We're seeing off by 1.3%. But Microsoft, actually one of the big points contributors to the NASDAQ today. Palo Alto Networks, interestingly, Microsoft unfolding some new cybersecurity offerings, and people worried about how that's going to affect Palo Alto Networks and indeed Zscaler and the like. We're off by more than 7%, so big hit in terms of competition there. Lucid Group, too, off by 12%. Look, the amount of deliveries of its latest EVs in the previous quarter, or the second quarter, just did not live up to expectations. Meanwhile, we want to talk a little bit more about Microsoft and Activision Blizzard. We can start with perhaps the way in which gamers are being affected. We're worried about competition. Who are playing the games? Hispanic, Black Americans are actually playing video games more than other ethnic groups might have been considered. It's according to an annual study. This changes that stereotype that largely it's white Americans that are the industry's most enthusiastic consumers. Joining us on this, and indeed the deal more broadly for Activision and the competition out there, Bloomberg's Cecilia D'Anastasio. We're so pleased to have you in the studio. And first of all, debunk some myths for us. Who are playing these games? Who is worried? Who is anxious about how they get access to Call of Duty?
Yeah, that's a great question. So it is true, the stereotype is true that most gamers are white and men. 72% of gamers are white men. However, white Americans are not the most likely people to be playing games in the US. A new study from the Entertainment Software Association showed that Americans who are Latino, who are Black, who are Asian American are significantly more likely than white Americans to be playing video games like Call of Duty.
We've known that more women are playing in various, whether it's on mobile or on console. Is that being reflected in the games? Is there more diversity within the characters that are being played?
About half of gamers are women, that's true. And increasingly, gaming companies are realizing that it's productive to their bottom line to make games that really appeal to a wider audience than traditional. And so we're seeing more protagonists in AAA games, these blockbuster games, who are women, who are non-white. And that's something that's been really celebrated widely across the gaming industry and also brought a lot of new gamers into the fold.
Let's talk about whose console you might be playing. And what's been so interesting as we go through the twists and the turns of the Microsoft Activision deal is it seems as though basically Sony's stranglehold on consoles has in large part been why Microsoft's allowed to make this deal, right?
Yeah, it's really interesting. Microsoft has argued for a long time that it's had a third place in the console wars, the so-called console wars between Sony, its PlayStation, Nintendo, its Switch, and then Microsoft with its Xbox console. And Microsoft has been working very hard to diversify outside of just its console business, including through its PC gaming offering, the Xbox app on PC, and also cloud gaming, which allows people to play Microsoft's games across mobile devices, tablets, smart TVs. And at the same time, what the FTC determined yesterday is that actually, when it comes to Call of Duty, Microsoft isn't really incentivized to block off the game from competitors like Sony because Microsoft actually, in a large way, relies on Sony consumers, PlayStation gamers, to play Call of Duty with people on Xbox.
So, for now, clearly in their interest. Great to have you. Thank you for breaking it all down. Cecilia D'Anastasio with all that great reporting. Meanwhile, let's stick on the deal on whether or not Microsoft is eventually going to be able to get its hands on Activision for sure. Britain's antitrust watchdog said that a new merger investigation into that $69 billion deal may be needed to reverse its previous veto. Joining us now for more about this is Public Knowledge Policy Director and Competition, Charlotte Slayman. Thank you so much, Charlotte, for joining us. And of course, you have a history of working with the FTC. You understand some of the concerns around competition. When you saw that particularly the judge in the US in San Francisco had given the clear for now, in the US at least, what did you think?
It's a disappointing result for consumers. Once the FTC brought this case, we were really hoping that it was going to be a win on the preliminary injunction. I do think the FTC might continue to fight the case, but this is certainly a loss.
Okay, interesting. And whereas many have felt that actually, even though the FTC lost in this way, they have managed to force the hand of Microsoft to make some changes, and indeed so have UK regulators. Do you think, why don't you, for example, think that that's been enough?
Yes, and there's also a settlement in the European Union where they're going to be giving some licenses for other cloud gaming services to be able to use Call of Duty. So that's great, that's progress, but we would still be concerned about the competitive impacts of the merger. It's not just about Call of Duty, it's also about the next big game. And I'm concerned about independent gamers, independent game studios having the same opportunities to reach customers, and for those gamers to have access to those games. So there are going to be broader anti-competitive impacts that we're concerned about, and I think Call of Duty isn't the only thing that needs to be fixed.
And of course, as you mentioned, deal isn't yet done. FTC could appeal. We also know that the UK, they might have to start from basically scratch, once again coming with different ways in which they could alleviate the previous veto to the deal. What could they do you think, Charlotte, to alleviate some of those concerns that you have?
Well, I think it would be very difficult to address this merger with behavioral remedies with a settlement. I think that's still on the table, but those settlements are often time limited. The settlement in the European Union is for 10 years. Now, a lot can happen in 10 years. There could be innovation and new competitors coming up. But I think about past mergers where we've seen a 10-year settlement agreement, and that 10 years actually ends up going by really fast, and then consumers are left with a more consolidated market. So I think enforcers need to be really careful in making sure that they're only agreeing to a settlement that is really going to solve the problem.
And sort of herein lies, if you look at history, what the FTC is trying to do. They're almost trying to unwind the shift of this particular regulatory authority in the way in which it views deals, in the way in which it views the adverse effects of oligopolies or monopolies or size and scale, because it isn't just all about consumer and prices. It's about more than that, it feels like, for the current guise of the FTC. Are they going about this? Is Lina Khan, to put it bluntly, going about this the right way to take on these big deals, try and take big hits and then be losing them?
Well, of course, it would be better to win. But when you take on those big, hard cases, you're going to have some losses. And I think, we all know that is part of what may end up being a long process. I've been really frustrated that Congress hasn't gotten more involved. Because that is what we really need. These cases are showing that the law isn't where it needs to be. And so we really need Congress to be able to act. There was so much attention and excitement about antitrust in Congress last year, and it didn't come to fruition. They didn't pass any new antitrust legislation except to give more funding to the agencies. We really need stronger antitrust laws in the U.S. to be able to have competitive markets.
Some would say they are stronger, potentially in the UK. What model do you want to see? What changes from a legal perspective?
Yes. So in particular with this case, it seemed like the court got tripped up on the idea of a vertical merger. So it's not a traditional horizontal merger where maybe a game studio is buying a game studio. This was a provider of consoles, subscription services, and cloud gaming buying a game studio. So the court saw it as a vertical merger and talked a lot about how vertical mergers may have pro-competitive benefits and are rarely stopped. But that is not the same as having a presumption in the law in favor of vertical mergers. Vertical mergers can be illegal under antitrust law. But it's clear from this judge and others that needs to be more clear. The FTC is working right now on new merger guidelines, and I think that will be an opportunity for them to educate judges and make this more clear that vertical mergers can be really harmful. But that's also an area that Congress could help with.
Could that not just be politicized, though? Because many would see this as a relatively Democrat-heavy FTC.
Well, certainly there are no Republican commissioners at the FTC right now, but I think, again, that's on the Republicans in Congress who need to move forward with that. But there has been a lot of bipartisan interest, especially last Congress. There were multiple bipartisan bills that passed through the Judiciary Committee with bipartisan votes. So I think Republicans are also interested in antitrust enforcement, and they're recognizing that that's actually how we get a free market functioning correctly.
Charlotte, it's great to get your take. Thank you so much, of course, your previous expertise while working in the FTC and now with public knowledge and policy director there. Charlotte Slayman, thank you. Coming up,
thank you.
Let's discuss how American Express is trying to take on the world with the help of some fintechs. More on that next with Amex's Raymond Joba. This is Bloomberg. It's been 4 years since American Express claimed its cards are now accepted at just as many places as rivals Visa and MasterCard right here in the US. But it's now looking to do something very similar overseas. And to that end, it's been partnering with some of the world's biggest fintech companies, the latest being WorldPay, which will help it sign and manage new merchants to accept American Express more broadly in the United Kingdom. American Express Group President of Global Merchant and Network Services, that's Raymond Joba. joins us now for more. Raymond, you are the man who basically goes around getting merchants to take Amex. And look, this must be a big deal to get WorldPay. Has this been the theme to ensure that the likes of Stripe and the likes of Square are enabling my ability to use Amex in the UK?
Not only in the UK, Caroline, but around the globe. Partnerships with third-party processors and fintechs like Square, Stripe, and Adyen, WorldPay, they really have been helping to fuel our growth. They represent 80% of the merchants that we have on our network and represent 20% of the overall volume, but it's growing really, really rapidly and gives card members far more confidence to pull out their card at the point of sale and feel comfortable that it'll be accepted.
Fintechs have really therefore managed to sort of accelerate this, but it's also been an on-the-ground getting salespeople in front of certain types of merchants to bring them round to using Amex. How has that role gone? What kind of companies, what kind of sellers are coming to your platform?
Well, we started on this journey a number of years ago in response to our card members. Our origins are primarily around travel and entertainment. And what we recognize is our card members wanted to use their cards far more places. We provide rich incentives for them to use it. And in response to that, we needed to move into everyday spend categories, a lot of smaller shops and retail. And as we started down that journey, we deployed what we call a hybrid acquiring model. That means our proprietary teams sign and manage the largest merchants, let's say the 25% of the merchants that represent 80% of our volume. And then we deployed partners, both traditional third-party processors as well as fintechs, to go out and sign and manage that long tail. And it's been a terrific growth story. Since 2018, we've more than tripled the number of locations that are accepting American Express. And that gives card members far more confidence to pull out their card. And we have the desire to eliminate the question, do you accept American Express?
And not
we're
just
well on the way to that.
not just in luxury places, which often sometimes you think of a more, well, lucrative, higher earner, higher spender using Amex, but you're going to discount stores, you're going to cobblers in the UK, key cutters to get them to accept Amex. And to that end, how much has data been driving this? How much has technology almost been the driver of where you go, where you put your resources to work?
Well, data is one of the things that makes American Express unique. We both issue the cards, many of the cards that our card members carry, as well as we have direct relationships with merchants, and that creates a tremendous amount of data. And one of the universal truths that all businesses care about is they want to find new customers. And we can use that information and that data that we have to allow merchants to market into our premium high-spending card members. And to your point, whether it's Tesco's or Timpson's here in the UK or many smaller merchants, everyday spend categories, we want to make sure that we have coverage everywhere where our card members want to spend, but also we can help them grow by allowing us to be a very, very efficient marketing channel so that they can market into our premium card member base and find new customers. And it's something we call Amex Offers, and it's powered by the unique and rich data that we have by being both the issuer of the cards and having those direct relationships with merchants.
Why do this now, Raymond, when we're thinking about an economy that's a little bit tougher, when we're thinking about people spending in a more different manner? Why make this drive? Why make this commitment to be more overseas in your manner?
Well, two things. First, in response to our card members. Our card members wanted to be able to use their card in far more places, so we started down this journey in the U.S., as you mentioned, to reach parity. That meant in the U.S., 99% of the merchants that accept credit cards now accept American Express. And internationally, we wanted to make sure we were in the places where our card members live, work, and travel to. So we focused the teams on some very important international cities, and we've made material progress. As I mentioned, we've more than tripled the number of locations that accept American Express since 2018. And we continue to have upside above that. And now is a great time to do it. And American Express has been around for 173 years. We've been through all types of cycles. We're operating in a cyclical environment. And good economies or bad economies, we know we need more coverage and give our card members greater confidence to pull out their card at the point of sale.
Raymond Jobal, great to have some time with you. Thank you. Let you get back to work in the UK. American Express Group President of Global Merchant and Network Services. We appreciate the time. Meanwhile, coming up, we will go back to Sun Valley, where tech and media executives are coming together, doing what they do, hobnobbing, smiling for the cameras, talking about everything, chips, trade, you name it, media, entertainment, deals. Here's what Paramount CEO Bob Bakish thinks about the summer box office this year.
We're feeling great about it. We're opening MI7 this weekend. It's a great film. Tracking out, it's awesome. And it's a thrill ride, so you're going to have a lot of fun watching it.